What's up? What an action-packed session we had today. Eric reveals committing the cardinal sin with property, and he's selling a long-held asset. Explains why he's selling that, and more importantly, where he's going to allocate the capital. We then roll into Mark and a few little tidbits of his investment strategy moving forward after what will be a turbulent year last year. Then we move into some hot topics like the biggest business winners tip that we think for each could be a stock, it could be a sector, biggest business losers and why, best performing assets, and it's not what you think. It's not all just Bitcoin, so stick around for that one. Then the worst performing assets as well, and again, not just a stock tip, it could be sector related as well. Most anticipated trend. So yeah, some great intel there, and also we're going to toy with the idea of launching our very own Friday Pod newsletter. So much to take in. Great episode. And as always, like and subscribe. And if there's something you do like, let us know. And more importantly, if there's something you don't like, let us know as well. Enjoy the pod.
I don't know about you guys, but these Friday podcasts are coming a lot quicker than usual. I don't know how you guys are feeling about them, but I feel like we're recording these a lot more than weekly.
I think we've been changing the date. We've been recording on Tuesday, recording on Thursday. Today, we're recording on Wednesday. I think it's a bit confusing, but there's so much happening in the world that I think that's what's causing it as well. And then you're out there recording a bunch of other pods. I just started recording my pod, so it feels like content creation is number one this year.
We've been talking off camera a little bit, and I told the boys some of my investment strategies this year, and they were all very, very surprised. And I thought it would be good to dig into this a little bit, because not everyone knows kind of what we're investing in and how we're investing. And it'll be good to unpack this a little bit, because at the end of the podcast last week, I was telling the boys that I'm actually going to be selling a property. And for any of you guys know, me, I'm all about keeping properties for the long term. And I'm sure you guys have a fair few questions on why I am doing this. So I'll leave it to you guys. Ask away, and then I'll explain to you exactly what I'm doing.
Eric, why'd you sell your property? Lay it up a bit. I think Eric, as well. If you can explain the type of property that it is, what it has been used for, like lay out some clues, what it's been used for primarily to now, and what the decision was around. Then we can pull it apart.
I'm more interested to know where the capital's going, but we'll get to that.
Yeah, me too.
Yeah, well, let's do the first part, and then we'll do the allocation on the second.
Like for the first part's important, I reckon, as well.
Yeah, the setup.
Yeah, I mean, I've been accumulating property for many, many years, and I'm a long-term holder of property. And I sold 2 properties during COVID, and they were both properties. They were both apartments, and they were in our holiday pool. So we had a luxury holiday management business that we had for many, many years that we sold last December. And I had those properties held in there, and the world was crashing at that time. Borders were closing, and I'm like, man, I'm not going to get the return that I'm going to need on these properties. And I sold 2 properties, and I still have PTSD to this day about selling those properties, because it's like the day that I sold them, the apartment market just went through the roof over the last 5-6 years.
They would have doubled in price, right?
Like more than doubled in price. And the income that I'd be getting now on them, through the rental pool, holiday letting pool is incredible. It'll be like, two people's average wages.
And am I correct in saying they were the ones in the Q1 building? So if you know the Gold Coast, you'll know that the per square meter rate for new apartments is fucking ridiculous versus the Q1. So the Q1's got like hundreds and hundreds of apartments, but they have the biggest floor plans of nearly all buildings in the Gold Coast. So your per square meter rates, there's such an arbitrage on those. We nearly bought a 3-bedder on the 60th floor, just because the square meter rates were like, it ended up working out something like nearly $1 million cheaper for something in a brand new complex.
Mark,
something like
remind me anytime I need salt poured into my wounds, I'll go straight to you, mate. Because
Eric's just sitting there, just like,
Yeah, they double.
Don't
Screwed.
remind me.
Yeah.
Mark's not helping me in any way, but yeah, one was a Q1
No,
or was that
it's
circle
important context.
on the Gold Coast. And ever since then, I'm like, you know what? I'm just keeping. And since then, and even before that, we've been doing a lot of different types of, properties and developments and buy and holds and, manufacture equity and stuff like that. And we've just built a new property that we moved into recently. And the property that we moved out of was a fairly new property that we actually bought off the plan that we've done really well on, and we've held it now probably for about 7 years or so. We were living in it as our primary place of residence. And I was going to just rent it out, right? Going, okay, I want to get half decent rental return. Rents keep going up, and I'm going to rent it out. And then I started thinking to myself, and I'm going, you know what? There's a lot of opportunities out there at the moment, and I have a lot of asset in Australian real estate. And I need to start diversifying a little bit more. I have businesses and, the online businesses and stuff like that. But I look at those as assets, but I don't look at it and sit there and go, I'm not doing anything else. I'm just going to sit on this asset because I know it's going to be worth something in the future. I'm always just progressing. It's not how I roll. So I've been thinking to myself, going, okay, it was our primary place of residence for many years. It's went up in value. And
Can we talk numbers, like what you paid for it off the plan, what you think it's worth now?
Yeah, it's I reckon it's probably worth around, I mean, it's not big numbers, but it's about $2 million. We paid 900 and change for it. So it's doubled in value.
Townhouse? Yep.
It's like a villa, yeah. And basically we don't owe much on it at all. So we've got this house that's sitting there, and I'm like, okay, well, there's a fair bit of, equity just sitting in this house, right? Cash. And started working out the calculations on what I could get for a rental yield. And, like by the time you pay the body corporate, because it's in a body corporate, and you pay, the insurances and the rest of it, I'm like, the return's not good enough. Right. And I'm like, there's a good time here now that I can actually sell this tax free, take that money and invest it in other things. And I'm diversifying now. So what I want to start doing is diversifying, not just in different assets. I already have Bitcoin. Yes, I have Ethereum. I got plenty of businesses, but I want to start diversifying my money overseas, right? And I want to start investing a little bit more into stocks, more into Tesla as an example, because I believe in Tesla and the long-term potential of Tesla, and Bitcoin and all overseas stock. And I'm going to start looking in Dubai, for those of you guys that, heard our last pod, that we're going to be doing stuff in Dubai. And I've got a very close friend there that's honestly made so much money over the last 5 years in Dubai. It's not even funny. So that's what I'm doing, and diversifying a little bit, but it's actually taken me a long time, right? It's actually taken me a couple months to actually make the decision in my mind, because I was battling going, no, I'm not going to do it because I'm going to regret it. And I'm going to look back in 5 years time, and when it's going to be worth $2.5 million, and, these types of thoughts going through my mind because of the, the PTSD basically that I have, from those other two sales. But I'm like, you know what? I just cut the ties, cut the cord, and looking at diversifying. And I know once I've done the calculations, I'll get a lot better return on these other assets. Something like a Tesla as an example, that'll just be long-term, right? Buy and hold. Same thing with the Bitcoin, buy and hold. And with the Dubai stuff, we'll just see how the market goes there and what else we can do. So that's kind of what I've been doing, what I've been contemplating over the last 2 months in my mind. It's happening. We're running a 2-day property development event at the luxury Mondrian Hotel in Burleigh Heads here on the Gold Coast. And we want you there, because if property development is even on your radar, this will save you years of guessing. Over 2 days, you'll see how deals are actually found, how people fund them without having to be rich, and how projects go from the idea to actually being built. You'll hear from people doing it right now, with special guest Michael Matusik, Australia's leading property analyst. and commentator on what the market is actually doing right now. Funding specialist showing you how money actually flows. You'll leave knowing what your next move should be. Check the link below, grab your early bird tickets now, and let's start developing.
Yeah, I mean, the fact that it's capital gains tax free. One, you get to keep it all, and two, you can't do anything more to that property to improve its value. So
That's another thing I didn't mention, right? So
you're just praying for the market to go up, and if the market peters out a little bit, and then you got your dry powder caught in you guess you can refi and pull some equity out of it, but
yeah,
again, you got to beat that hurdle rate, right?
yeah, and that's the other thing I didn't mention, right? So any of the property that I have, it's all property that you can manufacture growth. You can do a DA, you can split it, you can build units on it, you can build duplexes on it. These types of land plays, like the one we have in Burley is an example where we're going to do 5 villas on it, and that's the only one I can't do anything with. It's 7 years old. It's still fairly new. You know, we kept it in really good nick. You can't subdivide it. You can't do anything. It's in a body corporate community, beautiful position. You know, not far from the water. It's on the water. But you can't do anything with it, right? Whereas I want
That was the same. That was the same for the 2 properties you sold in Q1 as well, though, right?
correct.
Well, I mean, kind of couldn't do anything with them, but I think the the important thing is doing the calculations based on rental returns as well. Like you've got this asset, so you know, let's say it's fully paid off at 2 million. I know you're a little bit on it, but let's say it's fully paid off at 2 million. The
Yeah.
return on that is what, you know, roughly what percent return is it? How much?
Well, yeah. So
That's
if you get
quite
say 1,700 a week rent, you know what I mean? Now it's, you know, a $2 million asset. It's a 4.4% return plus costs that have to come off that as an example. And yes, you know, it'll go up by, you know, hoping that it would go up by, you know,
Right.
5-6% a year, and you add that back and the rest of it. But I could get better returns doing other things with that money.
But you know, like
Decide the
we've spoken about the debasement, like the hurdle rate of monetary debasement is 8% plus
Yep.
whatever inflation is, and at the moment in Australia, it's running at 3 point something, so that's 11 to 12%. So unless you're clearly making 11 to 12% a year, it's not that it's not worth keeping, it's that can you beat that hurdle rate? And that's what I'm interested to see how you're gonna allocate
Mm,
these funds. But Rafi, I think you had a question?
yeah, I mean, like, when you have so many assets and you're thinking about, basically freeing up your capital to put into different assets, like, what is the framework you use in your mind to calculate opportunity costs? Because I think that's a really practical thing, because a lot of people might be sitting on different assets and um, different bits of capital to decide where to go. And so how did you run through that opportunity cost in your system, knowing what you've done in 2020 to get rid of some of those Q1 properties? How has your analysis of opportunity costs changed, if at all? And how did you decide, okay, I'm going to cut the ties here now, and with a degree of confidence to move forward? I guess that's the thing, because, when you have PTSD, some people just always hodl moving forward, but you going back into it, there must have been, I'd just be interested to hear the thinking.
For me, it was not that it was easy. It's I'm looking at it going, okay, like let's look at my portfolio, let's look at my assets, and I'm top heavy in real estate, right? And I want to diversify. So I want to buy more Bitcoin. I want to buy a bigger chunk of Tesla, right? And I think Tesla, in the next 10 years still has plenty of growth to be had. It's not your 100 times, but I still think there's a good, multiple in Tesla, because it's a lot more than a car company, as we discussed. But again, sitting there and listening to these conversations and listening to Mark and listening to Adam and James and being in different chats and stuff like that, it gives you, a lot more inspiration, a lot more motivation, to look at different things, right? Like Tesla as an example, like Bitcoin. But for me, it was just very easy going, I see what's happening in Dubai. I see the infrastructure that's being built there, the spending that's happening there. And I've got the stories of my good friend that's been there for 3.5 years going, hey, see this office that I just bought? I paid 1.5 million for it, as an example. And this is, in Australian dollars. Well, I've just been offered 3.2 million for it 18 months later. these types of conversations. And I'm like, you know what? If I can do 20% of that, right? If I'm 20% right, it's so much better. And that's and the writing's on the wall. And for me, I want to start diversifying and having a bit more money outside. So I want to buy something in Europe as well. Um, in our hometown, where we were born. My parents were born in Portugal. We're Portuguese descent. And, for me, it's just really looking at that succession planning now, going, okay, where do we want to be in the future? Where are some home bases? So it's a little bit of lifestyle play at the same time as investment. But at the same time, I believe in these places. I believe in like Dubai. I believe in Tesla and these types of companies. And that's where it's at. So it's basic numbers really with a bit of lifestyle twist to it.
That's interesting because it's like you've expanded the aperture of opportunity just by being around other people that are investing differently. And I think that's an important thing, like just being around people that are allocating their capital in different ways is such a valuable thing because if you're in your own lane, like for example, I'm in e-commerce. I only talk to e-commerce people and it's like always e-commerce. But just even being part of these conversations, it's like, oh, I get to see how other people are spending their time, finite resource, spending their capital, which can be an infinite resource if you know how to like grow it. I think it's really clever and willing to plant the seeds early, knowing what your long-term vision is from a lifestyle perspective. I think that's a good kind of like framework and calculus to run through. So no, I appreciate you sharing that, man, because it's because I'm like a few years behind you. So it's like just hearing your thought process helps me update my OS as far as how I approach opportunities that come across.
And that's what it's about, right? Like if you're not in the rooms or you're not surrounding yourself or you're not listening to be different types of podcasts, the opportunities don't come. Like the opportunity with the Dubai stuff wouldn't come if I didn't have the relationship and I didn't go and, you know, originally go meet my mate that's been good friends with me now for, 17, 18 years. It all starts with that connection. Mark, you were going to say something.
Yeah, I was just gonna say, hearing Marco talk about his returns in Dubai definitely made me want to broaden my property portfolio as well. But I obviously invest in equities and Bitcoin as well. What I'm interested to know is, have you decided how you're going to split that 2 mil?
Um, See, the thing is with Dubai is you can do depending on what development you buy, there's different opportunities, right? So usually it's about a 20% deposit that you pay, and then you pay 1% a month over time. So what I can do, right, is hedge. So what I can do is go and take that money as an example, put some into Bitcoin, put some into Tesla, take 20% of whatever I buy there. So say if I buy something there for $1 million as an example, put 200 grand down, pay 1% a month, but I'm not just going to have that money sitting in an account doing nothing. I'll have it offsetting other loans or better to buy Tesla and Bitcoin and take out as I need for that property to buy to a cap. That's what I'll be doing.
So that's it. You're thinking about going almost three ways: Tesla, Dubai, Bitcoin.
Yeah. Yeah. That's what I'm
Fucking
going to be
man.
doing. Yeah. And you know what? Like another thing, like I was at a hotel not long ago for the weekend celebrating our anniversary. And then I'm talking, what do? You chat with people. I bump into this guy. He's managing a wealth fund of high net worth individuals. And he's big tech. And we chatted for like an hour about Tesla. Right. And chatting with this guy for an hour, and he has hundreds of millions under management, and he has a big play on Tesla. He's been I think he's been investing in Tesla since like 2015 or 2016, something like back in the day. Right. And the conviction this guy's got, right. And then the conviction that, others have within the podcast and community and it's kind of, like you start listening to this and then you create your own belief and then you start doing your own research. And, a lot of people still think Tesla is a car company, right? It's very, very, very far from that. And you start digging into what they're actually doing. And he's sitting there like saying, I'm telling you right now, I still think there's X amount of times, right, of growth. And I'm not going to say what it is, what he said, because I don't want people to go out there and buy Tesla based on what he told me. Do your own research. But I'm like, man, it's to me, it's a good hedge. And again, bullish on Bitcoin for long term. And just get some money overseas. So that's basically what I'm doing with it. Now, how about you, Mark? Like, I know we talk a lot about what you're doing, and the different types of things that you're investing. But what are you actioning at the moment?
Yeah, so I think my biggest trades outside my own property, so outside my place in Melbourne and my place in Byron, my biggest trade are Aussie resource companies. So you if you've had a look at the Aussie dollar lately, the Aussie dollar's gone from like 65 cents to 71 cents. So the Aussie dollar is strengthening versus the US dollar and other currencies. And that usually happens when we're going through a commodity cycle. So I've got a fairly significant investment now in Aussie uh, miners and producers. I've got a significant position in Bitcoin, which is my HODL Bitcoin that I've never sold. And I'm basically looking for opportunities to double down on both of those positions. So if we get corrections in commodities, I'll be adding to those positions. And I've already started adding to Bitcoin again. So my first add was 88, 82. My second add was 77. My third add was 65. I've got some price targets in mind of where I think it's going, and I think that'll happen over the next 3 to 6 months. And so I'll be continuing to add and going bigger in that. So the goal is to kind of double down on both those hard assets and Bitcoin. And then the third thing that I've basically just started is an AI bottlenecks portfolio. So it's basically looking at we spoke on this podcast about the $85 trillion infrastructure build out that's going to be required for AI to happen. And there's going to be bottlenecks across so many different vectors, commodities, chips, packaging, energy. And so I've basically used the LLMs to create a bottleneck ranking system. And I've started allocating to that. So that's another huge position for me. And I was showing you guys, I might share it one day as well, but I was showing you guys how I created it. And you said, well, like, so I think James asked the question, like, what's your goal with this? What's your objective returns? And quite simply, my objective returns is to beat Bitcoin. So if Bitcoin CAGRs at 29, 30% a year, this portfolio has to beat that. Otherwise, I'm better off just investing in Bitcoin, right? So they're the three things I'm working on: commodities, Bitcoin, because I think Bitcoin is the ultimate. I mean, energy is the ultimate scarce asset, and Bitcoin is energy represented in digital format. And then you've got these AI bottlenecks, which is a little bit more techie specific, and Dubai, which is I've got money sitting there waiting to invest in Dubai. I think
Just on the Bitcoin, and again, not financial advice, not predictions. Mark, we had a conversation around: is this the last? Is there one more flush to go to break through that down into the 50s? Where are you still on the fence there, or you think we found a bottom?
no, I my base case is not that we've found a bottom. I think there's two important price zones that I'm watching. It's that 54 to 58, and then 35 to 45. I think both those zones are in play. My base case is probably we go 35 to 45. Putting it out there. Next Tuesday, I'll drop a whole episode on my channel where I talk just about Bitcoin for basically the whole episode and how I got to those price predictions, what bull case, bear case, etc. And I share a bunch of charts. But yeah, I think lower is in play for sure. A lot of it depends on the macro as well. Like if we get a broader market sell off, it's so much easier to bring those lower figures in play. Or we might just get that that one more tag down to 50, 54 to 58. The problem is when everyone starts saying it's going to go lower, like the easy money back in December, I basically said nothing good happens under 97. I was selling all my altcoins, selling all my family's Bitcoin, right? That was the easy prediction back then. Now the game gets so much harder. And you know what they say about picking bottoms? You get smelly fingers. So yeah, who knows? I think you have to have a plan. You have to have a plan.
I didn't know that, but I do now, and I think the audience will too. But thanks for that.
Oh, that's cool. Yes, well, no, I appreciate you guys Mark sharing that, because like I know Raf as an example, like you said, you're some years behind us, right? Raf is sitting there, building up his business, right? Putting all his time, all his energy, all his resource in his business, and he's moved to Dubai for that reason at the same time, so he can go there, make as much money as possible, and then eventually probably, be back in Australia. Maybe, I know that's what you mentioned before, but like these are big decisions that people need to make, right? Like James and I have a big development that we have going on at the moment. It's a big decision, right? Like we're not talking $1, $2, $3 million. It's a $21, $22 million gross realized value. Like it's big numbers. But the thing is, you have to make big decisions, and every single one of us on this podcast is making big decisions every day. And I want you guys, the reason why we're talking about this isn't so we can big note ourselves and what moves that we're making. It's just take you a little bit in behind the scenes of what we're doing and showing you guys that we're actually making decisions. We're not just sitting there listening to podcasts. We're not just reading books, right? We're actually putting in the work and putting our balls on the line. That is the reality, right? It could be the wrong decision. I could be sitting here going, you know what, in 5 years time, Tesla doesn't do this, Bitcoin's still stagnant, and, something happens in, the UAE as an example. You just don't know, right? But all you can do is just have enough conviction and actually go and take the punt, and then connect the dots on the way back and see how you've done. But yeah, no, thanks for sharing that.
What about Raf? What are you like, funneling all your squirreling away all your uptick millions into?
Honestly, I'm reinvesting so heavily into the businesses and all the things that fork off from it. I mean, I'm DCAing into like Bitcoin and just ETFs, just basic stuff, because I don't think any bit of capital is going to compound as fast as the capital within my business at this stage. So it just makes most sense for me to do that. And I just want to like double click on what Eric was saying there. It's like, we're in the arena doing this stuff. And like, I used to be like a primary school teacher. I shared this before, and I was like going between opportunities, and I was reading, but I wasn't in the arena doing anything. And then I was telling a mate of mine this, and he was like, Raf, you're being a donkey. And I'm like, what the hell? What do you mean? He's like, you're being a donkey. And let me explain. And he said, imagine you're a donkey and you're in the middle of a desert, and you're both starving and like absolutely thirsty. You're parched. And 2 kilometers to your left is hay, and 2 kilometers to your right is water. And your stomach's grumbling, so you decide, hey, I'm going to start walking towards the hay. So you're walking, but the sun's beating down, you're sweating, you're getting more and more thirsty. So you decide, okay, I'm going to turn around. I'm going to go towards the water first, so then I'll have energy to then get the hay. So you start walking to the water. You start getting more and more hungry, so you decide to turn around and go for the hay. In the end, you die right where you started, of both hunger and thirst. And I think what that first floored me, and I then wasn't as insulted that he called me a donkey, but he also really highlighted something super important to me, that like, you'll only get any progress by actually going to one end of whatever the opportunity is, even if it's the wrong way, because what you'll learn achieving and going to that end is you'll learn so much, and then your return trip, you're going to have so much more energy and so much more conviction on that other route, even if it's the wrong thing. And so to Eric's point, yeah, like we're putting our balls on the line. We're actually like executing in the arena, and yeah, we don't know where it's going to go, but we're not going to pivot or change our direction halfway through, because all the learnings, all the progress, all the benefit only happens when you actually get to that hay or get to that water, and then look up and reassess where you are and like what your capital situation is, what your opportunity situation is. So I just wanted to kind of highlight that, because that really helped me.
Yeah. I mean, it's no difference than what we're doing. You look at Unemployable Property as an example. It's like, okay, let's create an event. All right, let's go and pay a lot of money, right? To then go, all right, hopefully we could sell enough tickets to fill the room. Like it's a big risk, even though everyone says, oh, we want events, we want to do this, we want to do that. But again, it's actually doing it. That is the key, right? And now we're sitting here 3 weeks out going, okay, we're sitting in in a very good position, right? But again, yeah, it's just doing that work. Now, one thing, speaking of doing work, this is Mark's idea. Like, we need more work, right? When Mark's idea is, he's been saying for a while, going, hey guys, I think we should do a newsletter for the Friday podcast, right? And I'm like, what do you mean a newsletter? He's like, it's a newsletter where we do once a month, each 4 of us do a piece in the newsletter, and it's just value, right? Value for the listener. like a Substack kind of newsletter that you subscribe to, and every month you'll kind of get a bit of a story from us. And what we want to know is, for the listeners, what we would love is for you to comment in the comment sections in YouTube specifically, if you want to see a newsletter from the four of us every month, adding value. And what we also want to know is, what areas do you want the newsletter to be about? So do you want it to be about macro trends, as an example? Do you want it to be more around Bitcoin? Do you want it to be more about business? Do you want it to be about startups? Do you want it to be about investment? Do you want it to be about property focused, right? As in
Health,
investing in property,
lifestyle,
health, lifestyle.
mindset.
Yeah, mindset. Do you want to know a little bit more about what we are personally doing, as an example? So what we want to do is, if we get enough yeses in the comments and we have enough people saying, yes, I want it, and this is what I want to see, maybe we'll start doing a newsletter every month for the people that subscribe to it. So I promised Mark, he's been talking about this for a while, and we're like, you know what? Okay, we're going to mention it on this Friday podcast, and let's see how many people in the comments want it.
Yeah, and it can't, like, it can't be fluff, right? Like, for example, some of the things that I may write in the newsletter. Last month, I bought Rio Tinto. That's one of my largest positions in the ASX Australian stock market. So that month, after I bought that position, in the monthly version of the newsletter coming up, I might do a thesis on the play, why I bought it, what price I bought it at, what my target price is, and why I expect it to do well over the next coming year. So it might be a trade update. The next month, we might have just bought a property in Dubai in one of the new development areas. So that month we would write a piece on the property that we bought, why we bought it, etc. So we really want, I think, for this newsletter to be valuable, we really have to cover the nuggets, the money-making nuggets and ideas that we're executing on, and to try and share those with you guys in real time, so you can get access to those ideas when we're making those decisions, right? Not like we talk about it 2 years after the fact, I bought this stock or whatever, and it's gone up 10x. We kind of want to bring you in on the things that we're doing as we're doing them. James might be looking at a development site, show a visa, whatever it may be. But yeah, it's got to be golden nuggets. I think the best way for us to gauge whether you guys are interested is if you simply write yes or no, and one word. What do you want? What do you want to hear about? Where do you want alpha? Do you want alpha in the stock market? Do you want alpha in property? Do you want alpha in Mexico, like e-commerce, ads, like whatever it is?
And I think the as Mark just put it, touched the point there, you get every moron on Instagram going, "Oh, I told you before, I've been shorted this, you would have got this outcome." And it's like, great, anyone can pull up a chart and that, but you're going to see it real time. There's receipts getting dropped here, so it'd be win, lose, or draw in real time. And to that point, Mark, I'm not sort of emphasizing you, but you fairly public that you made a trade last year and it wiped you out for all your gains the year before. So you're going to see this shit real time, and where the rubber meets the road, so to speak. So it'll be, watch this space. But as Mark said, the guy said, yes, you're up for it, and B, you're not going to take that as a vote unless you put topic in there as well. We want to understand what it is that you want us to talk about.
Yeah, cool.
We want to know who's listening. We want to know who's listening, and we know what we're interested in, but we want to know what you guys who are listening are interested in, because we got a loyal substrate of listeners that listen every week. We want to know what you guys are into.
And if we're going to put in the work, because it's work, right? More work. We want to make sure that you guys actually want it, and we're just not doing it just because we're, for ourselves. We want to do it for you. Now, Raf, we've been talking over the last couple of weeks, and he's been mentioning this, talking about, like, he wants to talk about the 2026 predictions in certain categories. So I think it's probably a good time to roll into this, right? So there's 6 different categories that he sent us, and he goes, guys, I want to know, right, including myself, what you think in 2026 is going to be the biggest business winner, the biggest business loser, the best performing asset, the worst performing asset, the most contrarian belief that we each have, and what's the most anticipated trend you think is happening in 2026. So, James, I'll start with you. If you want, with the Biggest
Yeah.
business winner. What do you think is going to be the biggest business
Right.
winner in your?
I've got a mixed bag with this, and it'll be contingent on a couple of things. If you're a pundit or a follower of the 18.6 year property clock, America's going to shit the bed. If we have a pullback considerably, I think if you look at the GFC last time, you had a lot of people who are aging baby boomers want to get out of their conventional businesses. This will be the last shock for the baby boomers that want to exit businesses. They'll go, I don't have the energy to steam to push on. It's going to get tough. You're going to get discounted. Boring businesses or boomer-led businesses, I think they're going to come to market if you get this big pullback and the economy gets a bit tighter. And then I'll put an overlay on that is AI-driven, someone who capitalizes by tooling up in those boring businesses with the use of AI and bring them into the next century, so to speak.
So basically buying baby boomer businesses and implementing AI tech into them. You think is one of the
look at
biggest.
it. Look at with the AI agents that are coming online now, and I can't keep up. This is not my wheelhouse. It's more rough. Is that the amount of menial work that gets done by a low productivity or low output employee that can get replaced pretty simply. I think they're going to capitalize on that.
And what do you think the biggest business loser in 2026 is, in your opinion?
SaaS and startups that never actually built any real margins and were funded, they're going to get demolished.
Interesting.
Best performing asset.
Oh, let's everyone answer those first,
Okay.
and then let's go.
Yeah.
Yeah.
All right.
Yeah.
No worries, Raf. So biggest business winner and loser.
For sure. I think just for a bit of context, the reason why I wanted to do this is like you get to see a cross section of where all our focuses are and what we're seeing from a macro trend perspective. And so these are predictions, but also these predictions are going to inform, at least in part for some of us, how we're going to be investing and where we're going to be focusing our limited limited resource, which is time or capital, right? And so from a biggest business winner, macros, at a macro level, I honestly think it's going to be Google. And I think they're going to far and away take over like consumer AI in a massive way. I just don't see anyone like beating them because they just made that $1 billion deal with Apple. So now Apple Intelligence and Siri is going to be powered by Gemini, which is kind of insane to think about. And their entire AI infrastructure is burning money, but they don't need it because they're making tons off ads. They can just keep the race going. And in these like new technologies, whoever is able to invest over time and basically play chicken until all the other competitors are gone, they're going to win. And they just happen to have one of the best performing models like ever, even now. And I think they're biting on the heels of Anthropic, and Anthropic doesn't have the backing that Google does. So I honestly think Google is going to be a massive winner here. And I'll be really worried. I think the biggest loser, I could do the opposite side of the coin for AI, but actually, I think the biggest loser for 2026 is actually going to be media companies, specifically Disney, because they made such a massive bet in their media. They, with their like Disney Plus and all that stuff. And the thing is, they paid so much for new projects, and they're building so much from a content perspective, but everyone's watching it on YouTube, man. Like that is the biggest proportion of attention that's going out, more than movies or anything. On even TV, people are just watching YouTube. And so I think they did a misstep with Disney Plus. They could have made so much more money just licensing their shows. And now all the younger kids are growing up on CoComelon as opposed to all the, Disney IP in the past. Like, we grew up on like Aladdin and Lion King, but these young kids, they don't have that same affinity. So I think in 2026, they had a change in their CEO. So I think the biggest business loser is going to be Disney. We'll see if I'm right, but like those are my two.
Mark, what do you reckon?
Yeah, so biggest business winner and biggest business loser are probably a little bit related. So like if you look back for the last 50 years, like the market has valued asset light businesses and forward forward priced earnings. It's really rewarded a lot of software and SaaS companies and things like that. And that has never been part of history, right? That's only been an occurrence for the last 50 years. And if we're going into a world where AI commoditizes asset light businesses, then maybe we'll be reverting back to the way history was, where the value accrues to, you know, atoms, infrastructure, and energy. So I'm thinking, and I'm starting to see with the amount of capex that like the Mag 7, you know, ex Tesla at the moment is spending on hard like building infrastructure, there might have to be a re-rating. Like people might start to re-rate these companies, not as SaaS companies, but as hardware companies. And you know, that's partially why I'm so bullish on Tesla, because I think of all the people that know how to build, he knows best how to build. But anyway, my biggest winners, I think, is going to be the commodity producers, because their present net cash flow models are all built on commodity prices much lower. And so if the commodity prices that are rising at the moment sustain these higher prices, then all these commodity companies have to be re-rated. And I think we're talking about 2, 3, 4, 5x's on some of these companies. And I think the biggest, I mean, obviously software companies are going to do it tough, but I'll stick my neck out a little bit further, and I'll say the biggest loser is OpenAI, and it doesn't make it, whether it's this year or next. It doesn't make it.
And you've been printing those receipts for a while too as well. So it'll be interesting to see how this unfolds.
Yeah, and you know, part of the reason is kind of like, you look at Google. Google has a shit ton of infrastructure. Google has, and you have to look at data as infrastructure as well, right? And they have so much data in Google search and in YouTube, right? Those words are data. And then XAI has X.com, which is the town square. And so those data sets, I think, are so important. But OpenAI doesn't have that, and that's why I've been so bearish on OpenAI. But who knows? Let's see. And the fact that they're going to start charging for ads, and you know, Anthropic and the rest of them are taking the piss out of that. That doesn't look good from a customer point of view. And I used to use OpenAI like 2-3 hours a day, and now maybe I use it for 1 or 2 searches, but I'm cross-checking other searches. Like it's not even my primary source. So
Interesting. My angle is probably less on the big end of town and more on the kind of everyday person. I think one of the biggest winners now in 2026 and will continue into the future are trades. Everyday trades, the plumbers, the electricians, these type of trades. I mean, we had a post that went viral when I said, you know, trades are the new doctors and lawyers, and it went crazy in news.com and all this stuff. But I have a lot of friends that are in trades and they keep increasing their prices. And I mean, at the end of the day, they deserve all the money in the world for the amount of work and hard labor they actually do. But there's less and less people coming out of school wanting to take up trades. More and more people are going to want to, in my opinion, take up AI and tech and be influencers and brand builders and these types of things. And let me tell you, when your toilet is clogged or your oven is not working, you will pay whatever it takes to get that thing fixed. And in my opinion, trades are going to be a big business winner moving forward. You know, gyp rockers, tilers, these types of hard labor jobs. If you can actually set up a business around it, I'm not saying go out there and be a tiler yourself, but if you can actually create a business and have a team of plumbers or a team of electricians and scale a team of gyp rockers and these types of things, I think that's a big one.
100%. Who's going to actually do the AI build out, right? Like for these companies.
Correct. The data centers, like I got my brother-in-law, he's a plumber and he's building out data centers at the moment. He works for a large company and he's like, man, the company I work for is absolutely killing it. And they have so many contracts going ahead in the future. And he's been sending me photos and videos and stuff. And like, man, honestly, they cannot keep up with the actual demand. So the owners of those companies are going to be printing. James.
And that's for saying this. It just sort of got a lot of crossover to what I was saying before about boring business or conventional businesses that are producing this stuff. That's the sector I wasn't actually picking it out like I would like specifically like Google, but you know, that's the boring business sector. And if you do apply some ways to them, you know, I can't see how they're going to fail.
And big losers for me is kind of high street style stores, brick and mortar. in my opinion, we're in a prolonged retail recession and have been for a long time. This has been happening in the US and for a long time, and now it's happening in Australia. There's a bit of lag. Like I walk into, stores like Meyer and David Jones, and I'm like, mate, you guys have a massive expiry date on your backs, in my opinion, unless you can create some amazing retail experiences. Like Culture Kings have done a great job doing that. Like it's literally an experience when you go into the store, hence their success. But you tell me another store that you're having a great experience going into. There aren't too many, and more of them are closing up shop. So if you're thinking of setting up a business and you want to be in the middle of the Pacific Fair or any of these, Westfields and stuff like that, there's a reason why they're doing good deals with big tenant fees like gyms, because they need the traffic, they need the foot traffic to go through there, the Australia Posts and these types of businesses, because if they weren't there, I think it would be a little bit of a different story. That's my opinion. Now we'll go into the James, big best performing asset and worst performing asset for 2026.
I'm not, I don't know macro marks Intel, but I'm going to play it safe with Bitcoin. It'll probably outperform most. I think for an asset class that I'm hearing a fair bit about at the moment from here in Australia too, for some pretty heavy hitting real estate guys, is the mid-tier commercial property sector, office space and whatnot. I think that's going to be, the people are going to have their pants pulled down with that. Seeing a lot of debt, we're going to refinance that debt. You got interest rate rises if they're levered into it, and not a lot of return. So whether that sector gets hollowed out or not, and they work from home, whether they're coming back or not, that's debatable. But that sector's been been suffering for some time, I think. So
My uncle's got a cleaning and facility services business, and so he'd be the first to know. And he couldn't agree more that asset class is fucked.
yeah. So that's a technical term from Trader Mark.
How about you, Raf?
Man, honestly, my best performing asset was just going to be Bitcoin. I think it's like a safe bet because it's still like dropping. And we just know the movements, like especially again, the second half of the year when we start seeing that moving. Counterbalance that, I think the worst performing asset, just because it's at all-time peaks, it was kind of a two-way draw of like the S&P as a whole or gold, because it's just peak. Like people are like going into it's like, this is the best time. And I just, man, like every time it's an absolute peaks like this, and I could be wrong. I mean, Mark could just like school me right now on this, but like from my perspective, I'm just thinking, I don't see the room for gold. Like it's like all-time highs. I just think from where it is right now towards the end of the year, I think that would probably be the worst performing. And those would be the two counterbalances. But Mark, happy to be schooled, brother. What do you think?
I'm gonna listen. I'm not shy to put my receipts out there when it comes to Bitcoin, but I'm gonna hedge my bets because I'm leaning towards Bitcoin bottoming out towards the end of the year, and so I'm gonna say over 2026, 2027, or middle to end, over 2026, 2027, Bitcoin destroys every single asset class, followed by gold and copper. I'll also go as far as saying I think gold doubles in the not too distant future. Like I think by 2030 we'll probably see $15,000, $20,000 gold. So I don't think gold is it, and to your credit, it will probably have a 50% correction over that time. Like if you go back and look in the 1970s, it went from like 30 to 200 and then corrected 50% and went up to 800 or something like that, right? So there'll be some volatility. But yeah, I think Bitcoin, gold, copper, and I think the worst performing asset will be bonds. So government debt.
Cool.
Fair.
I
Love that.
You heard it first here.
I still think best performing assets. Yes, I can say Bitcoin because I believe in that as well. But I still think two things: manufactured growth through real estate in Australia is very, very hard to beat with leverage. And overseas investment real estate, like places like Dubai.
Mhm.
And there's a reason for it. What's happening in Dubai is if you build it, they will come. That's what's happening, right? And they're incentivizing people to go there. And if you actually research what's happening there, it is ridiculous the things that are the infrastructure that's being built there. With Australia, it's a little bit different. With Australia, if you don't build it, they will still come. And that's the issue that we're having here. It's opposite. We're not building enough and they're still coming. So basic supply and demand. Dubai, lazy money. I think you can still make money there, right? Not manufactured equity. You're not going to go there and develop and split blocks. I'm talking just place money. Here, if you actually want to get your hands dirty and actually manufacture some equity by doing a splitter block or a subdivision or doing 1 into 2, I think that's still very hard to beat. And we were on with, one of the heaviest, educated property insight guys this morning, who's going to be at the event on March 7th and 8th. And he's a data-driven guy, and he's basically saying something very, very similar.
You know what's crazy just on that is like when we were first thinking about coming to Dubai, it was like in middle of 2024. We came to visit to kind of like set things up and whatnot. Anyways, we ended up landing back in Brizzy, and our Uber driver, and I kid you not, I cannot make this stuff up. Our Uber driver picked us up and he was like, "Oh, where were you traveling to? Is this home base?" I'm like, "Yeah, we're thinking about moving to Dubai and whatnot." And he's like, "Oh, that's interesting. I have a property in Dubai. I've had that for the last 3 years." And I was like, "Well, how does that work?" He's like, "Well, that pays for my day-to-day life. And I just do Uber on the side just for some extra cash." And it just blew my mind that I'm thinking about moving here. I came back to Brizzy and my Uber driver already has a property there. So
Yeah.
people are already doing this in Australia and they don't publicize it. I just thought that was crazy.
And-
So I see what you mean by like setting in, letting it
And we're
grow.
talking specifically about Dubai, but there's other international
Well,
countries that you can do this type of investment in that we've been doing research on that are going like, unless you're manufacturing growth here in Australia, if you want lazy money, I'd be putting it.
let me quickly share a screen with you, right? Like this wasn't planned. Someone, Ben, our mate Ben,
Yep.
um, our mate Ben just sent this article to me. I couldn't even open it because it was like behind a paywall, CNBC paywall. Like, is that ridiculous that articles are still behind paywalls? So what did I do? I went and grabbed that link and I put it into Claude, and I said, Claude, give me the top 10 takeaways from this article that was just sent to me. I haven't had a chance to read it. And said the largest wealth, the title of the article is "The World's Rich Are Relocating at a Pace Unseen in History. Where are they going?" And I asked for the top 10 takeaways. Largest wealth migration in history. Billionaires already moving. 36% of UBS's 87 billionaire clients surveyed had already relocated at least once in 2025. Another 9% considering it. UAE is the number one destination. Golden visa programs are the key enabler. Europe is attracting through multiple pathways. So we spoke about Portugal. We spoke about some
Portugal,
places
yeah.
in Italy that are starting to offer special visas for business people. Like I think like a city like Milan is one of the most underpriced cities in the world because it has all the infrastructure. Things actually work in Milan. They don't work in the rest of Italy. I can tell you that as an Italian. So cities like that have been stagnant for so long, about to get some growth. Singapore remains top tier. UK is the biggest cautionary tale, and
Yeah.
there's a lot of analoguses with Australia and the UK. China leads the outflows, so people trying to get their money out of China. Record volumes projected to keep climbing. So this is a macro trend that's only just getting started, in my opinion.
Agree. Worst performing asset, in my opinion, will be tech stocks with all these big valuations that have been built in and they're not running out of profit. Salesforce, Zero, these types of things, especially with this AI revolution that's going to come. I think those aren't the best in my opinion. All right. Most contrarian belief right now in James's mind.
Well, I'm going to say you probably all know that I'm not the most as outward facing when it comes to social. I think from Contrarian that you could and looking at our internal network of guys that are doing deals, land deals and whatnot, that builders builders as in land developers, asset accumulators and whatnot will outperform personal brands.
Say that again.
There's a quiet way to generate wealth. You don't have to be a personal brand or an influencer to go and make coin these days. There's a lot of billionaires out there that still have an old shitty phone that they can't even save a number in, that run rings around the majority of the personal brands. So that's my belief.
Ooh, I like it.
All right. I like that. That's
Right.
interesting. My contrarian belief is that I think there's going to be, and we're already seeing a huge swing back towards in-person events. And I think businesses that are purely online without having that in-person connection, I think they're going to get a rude awakening, because there's definitely a benefit to building a personal brand online. But the only way you can establish a level of trust is taking that online presence, online connection, and then having some sort of in-person events. And I think like events are going to be a big thing. Just like, who are the biggest people in the world right now from an influencer perspective? They're actually streamers. And how do you see the impact that they have is when they go to these physical events and people actually show up in droves. Like for YouTubers, they have all these subscribers and so on, but people aren't following up to them or coming that way, like coming to meet them. So I think my contrarian belief is that we're going to see a huge swing towards in-person events, and live streaming is going to move people to start coming in person and meeting people and actually like codifying, like, because there's so much AI out there. There's so much like lack of trust, that the only thing that can wipe that slate clean and actually build a solid foundation of trust is in person. I think that we're going to see a huge push towards that. And I'm going to be focusing on that a lot this year as well.
Interesting.
Oh,
My most contrarian belief is that China wins the AI industrial revolution and beats the US. So I think a lot of people, especially US centric, don't discount, write China off. I think one of the reasons that isn't quite mentioned, but if you listen to Elon's latest 3-hour interview, he touches on it without, Elon is established in China, so he has to be very careful about what he says about China. But if you read between the lines, I think one of the reasons that Elon is trying to launch data centers in space is because there is no way for the US to beat China with humans, because they're 3 or 4 times the amount of humans, and there's no way for the US to beat China in energy here on Earth. So I think one of the unspoken reasons that Elon's trying to launch data centers in space is to try and get the jump on China from that point of view. But I think he realizes how much of a threat that they are. That's my most contrarian belief, that I think China is much stronger and much further ahead than people will care to admit.
cool. Mine's a bit more boring. But again, in the comments and the rest of it, everyone just waiting for it. I still think there's massive amounts of growth in real estate, specifically Southeast Queensland. I don't think there's a bubble. I don't think, I don't think it's going to be the same growth that we had during COVID, because that's just something that a sequence of events that I don't think that would, even if we had COVID again, that wouldn't happen at that scale. But we got to remember, we got 2032 Olympics coming up. That's not 10 years away anymore. That's 6 years away. And they still got a lot of infrastructure work to be done there. And I think the lack of supply is going to continue. The demand is going to come, because Australia is a small country and there's still a lot of demand. So all the people that are out there saying it's going to bubble, it's a Gold Coast, it's, it goes up, comes down. I think it's a different play. And I still think there's plenty of growth, especially for manufactured growth properties, like I mentioned before. All right, last one, most anticipated trend for 2026, James.
Just of late, it mightn't be that widespread just yet, but the vertical integration of and bringing everything in house with with your AI agents, marketing agencies are going to be dead, as Raf was saying. Your tech stack, you bring a lot of that in house now. So yeah, I think that's going to be a big trend when people do get their head around it. And then also people to help implement that trend, like the core bots of the world, to like RAF. We were going to have a show and tell with core bot, and it was a bit of a bastard for you to get up and running, and it crashed a few things. But when you have people, before it was how do you get AI in your business, and it's moved so fast now. It's had all those AI agents within your business. So I think that's going to be a fairly hot trend this year for sure, as when they iron the kinks out of Corebot and Cord. I've got all the other ones that are there, but that's
Cool. Yeah, right. No, I see that too. I think for me, my most anticipated trend has kind of appeared a little bit with the contrarian belief. Part of the reason why I think everything's moving, like the pendulum's starting to swing in person, is because people want to connect with people. And so my most anticipated trend is just within my own arena. I just think social commerce is going to continue to grow because people prefer to buy from people that look like them, talk like them, and they know, like, and trust you. And so obviously TikTok Shop is the first one off the off the blocks, but I see like YouTube diving super deep into that with what they're doing with Shopify. I see other platforms bringing social commerce in a massive way. And I just think the entire space of e-commerce is shifting, where it isn't just, eyeball arbitrage, buying revenue at a discount through ads. I think it's going to be like, who are you affiliated with? Who's actually promoting your products via content? And who are the people that your potential customers want to buy from? So that's social commerce. That's the thing I'm most anticipated about. Obviously, shocker. That's what I'm in, and that's the thing I'm most excited about for sure.
Cool.
So
Mark.
definitely my most. I got two, but my most anticipated trend is like human emulators. So I think XAI, Google, for these companies to win, they can't. It's not about them creating better chatbots. It's about them creating AI that emulates a complete human, right? Something that can just run 24 hours a day. I think first that'll happen on the computer side. I think XAI is working on that at the moment, building a human emulator. And then once they nail that program, or whatever you want to call it, I don't even know what to call the classification, that'll then move to robotics, and you'll have robots that are human emulators. So this intelligence will then, and Tesla is just the best placed for that, but it's also Google. It's Google and Tesla, right? Like they're the two that have all the chips in place. So it's not Copilot and all this bullshit. Like, who uses that? Like, these guys were at the forefront, Microsoft, and they just dropped the ball. So I'm looking forward to these human emulators, and I'm looking forward to more global travel and sourcing the best property deals in the world, no matter where they are.
I
Love it.
big trend that's already happening, but I think again, it is just the start, is people are starting to optimize for geographic arbitrage, right? And what I mean by that is where they live, lifestyle, regulation, tax, where they bank, where and how they, educate their kids, where they hold their assets. More and more people, right? And it's not just in our circle. We'll be looking at different options on where they invest, where they live. And I think just the geographic arbitrage is going to be a thing moving forward for a lot of different people. Second residencies, remote earnings. Like you look at Raf as an example, perfect example, right? Bit easier for Raf because he doesn't have kids, right? But a guy from Brisbane, geographic arbitrage, going, you know what? I'm going to move to Dubai. That's where he chose. I'm going to make a shit ton of money. I'm not going to pay a lot of tax. That is 20 years ago. A lot of people didn't think like that. And now people are actually doing it, and it is available. And I think more and more, even families will find ways to do that as well. So I've called it geographic arbitrage.
The world has gotten so close together.
Guys,
Love it, man.
that's pretty cool. I didn't mind that, getting some of our opinions, talking a little bit more personally about what we're doing. Again, guys, just to remind you, if you want us to do a monthly newsletter, yes, no, put it in the comments. We want to see a shit ton of comments, whether it's yes, whether it's no, with a word beside it. Is it macro trends? Is it Bitcoin? is a property, is, do you want to know, how Mark is going on with a 6-pack, whatever it is. You just put it in there, what you want to know, lifestyle, fitness, what he eats, James.
And there's one more thing to mention that's coming up as the clock's ticking and there's not many tickets left. Eric, what is it?
Oh, you just reminded me. We've got our Unemployable Property Find Fund Develop event, March 7th and 8th. Burley Heads, the Mondrian, 2-day event with a networking event on the Saturday night at the pool deck. We got Michael Matusik, which is one of the, top property analysts and commentators on the topic. He's got 30 years experience as a keynote speaker. Mark, tell me.
I was going to say, if we asked Michael Matusik which state he thinks is going to be the best performing state in 2026,
He's actually going to tell us. Will you tell him what he's going to tell us?
What we said to him this morning, because we had a
won't reveal it.
No, we're not. We said to him, Michael, if your developer came to you or you had 10 million landed in your lap, which state and what type of housing would you deploy it into and why? And he said, I don't have that answer right now. I said, but you'll have it by the 8th of March and Sunday morning. He said, I will have that. So Michael Matusik is putting his $10 million bag on the line. And so you need to beat the event to work it out because we're not going to let that bag anywhere else. So
we'll actually put a link in the description. For those of you guys that aren't on YouTube, listening on Spotify, go to www.unemployableproperty.com.au/event. Mark's going to be there. Raf would have been there, but he's in Dubai.
The PJ's booked out that day. The Unemployable PJ's booked out.
And there's going to be a bunch of us there. 2-day event at the Luxury Mondrian Hotel. It's going to be unreal. We will probably be sold out within the next week. We've been overwhelmed with the amount of people that have been buying tickets, and that goes to show you, Raf, these in-room events, very, very important, and the networking that's going to be there and the caliber of people. I'm so surprised. I'm just going through the emails and going, I know that company, this company, that company, from real estate agents to doctors to developers, builders, successful, corporate people, all going to be there. So yeah, guys, that's another Friday pod. Appreciate you guys. I think we're finding our groove. I'm actually liking the energy and I'm liking some of the stuff that we're talking about. I hope that it's adding value to you guys. Again, please comment on the newsletter and let us know what you like. Let us know what you don't like. And we just want to keep improving and providing more and more value for you guys. So appreciate you guys, and we'll see you on the next one.
Hey there, I hope you enjoyed that episode of Unemployable. If you'd like to watch another episode, just click there.